edutech is an interesting spot for me to be in today because I've always been, or was an interesting spot because I've always been in the education industry. I started out 8 years ago building education technology solutions. But while I was at Andela, I gradually began to understand that, like we all know, talent is never enough, and it's important that the right kind of talent is able to monetize their talent in ways that are not beholden to particular interests or powers that be. And the model for monetizing software in Nigeria really boiled down to two things. One was find an employer who's willing to pay you, right, or build a series of solutions that you sell. But there was nothing like building a business out of software simply by being an engineer. And I wanted to be able to build technology that could enable that, because at the end of the day, if we're talking about how technology is transforming Nigeria, key to that value proposition is that there has to be an incentive for the people building the technology to create wealth for themselves and for their families by doing so. And Flutterwave was my way of bringing the payments and the fintech ecosystem to a pure application layer, so that it became possible, right, for us to actually have developers build big businesses without having to go have multiple meetings with bank executives, multiple meetings with everything. And the only way to do that is shared fintech infrastructure, which is what Flutterwave is doing today. Well, I mean, I'll tell you that at the risk of annoying some people in Abuja, the folks who regulate fintech are far more astute and capable in my mind, and also very forward-thinking than the people who regulate education. I have to tell you that because I've kind of dealt with regulators in both spaces, and I think there's a big need for more visionary regulation in the education space, because when you look at the folks, the CBN, they're thinking about themselves as enablers, not as people who are there to stop progress. They're enablers that are protecting the consumer. And I don't think that the education regulators have got into a mission mindset that appears like that just yet. But there's work to do there. There's work to do there. Flutterwave is building shared technology and infrastructure for the industry. We believe that closed infrastructure is not going to help the industry, and we want to build a platform for everybody, whether they're fintech players, whether they're financial institutions, or whether they are enterprises that are trying to build payment into their value chain. We want to provide a platform where they can all innovate. That's really what we set out to do. Build technology and infrastructure that is safe for the consumer, safe for the ecosystem, secure enough, and flexible enough at the same time for these different parties to innovate on. Of course, I mean, talent is at the heart of education and fintech, and I think that one of the beautiful things about what we could do in our industry is really kind of push those efforts forward, both from the point of view of educating more people about how to integrate with payment products, and also from the point of view of building an ecosystem that is welcoming to people who want to learn more about fintech and doesn't necessarily treat new entrants with suspicion all the time. And as a company, Flutterwave has really built kind of a sweet spot around it. We spend a lot of time and money building developer communities through our support for organizations like Loop, Dev Center, trying to educate them about this new fintech thing and how they could plug in as developers and make some money. And it helps our bottom line too, because the more developers know how to use our products and understand our products, the better for our business. We tend to take a longer term view to these things, so we're not inclined to charge anybody for these lessons, and we're always happy to build the ecosystem by offering the education for free. I think what it really boils down to is really understanding the business model development process. At Andela, one of the things I learned was basically, there's many ways to capture value, especially when you solve a problem. And we've carried that mentality over to Flutterwave, especially in the way that our business model. So our business model is we don't tell partners to pay for anything. Our infrastructure is free to anybody. The only thing we ask is that when value is created on our platform, that you're generous enough to share a little bit of that with us so we can continue to build out the ecosystem. And it's pretty much the same idea with Andela, right? Andela literally pays people to learn how to build software, right? And it seems like a stupid or foolish idea in the beginning, but ultimately you're bringing long-term value in that person, which then can then be provided, that person's provided an opportunity to work with much larger partners, as well as continue to develop themselves as a professional in the space. And then ultimately at some point, at Andela, it's a predefined point of 4 years, you're let go and you can be on your own. But embedded in that seemingly foolish model is a way for us to create and capture value in a way that's sustainable for everybody. So I think that's kind of one of the biggest lessons I learned, is that it's so important for you to be able to create and capture value in a sustainable way, and not be very short-termist about how you do that. My experience has been that the banks are very interested in what's going on in the fintech space. I think it's helpful to keep in context the fact that we've kind of come from a little bit of 15 years of ice, so to speak, where innovation was outsourced to big players and people didn't really think they had to innovate by themselves. But market conditions have changed radically since those times, and we've come from a time when all it took to be a banker was to be able to get large government deposits. They were 40% of the banking industry, to now in the post-TSA era where you actually have to work to make your bank big. So that changes the game, and it provides an incentive for the organization to move quickly towards fintech and digital, embracing it, and they certainly are. But I think where banks are struggling is figuring out how to play, given the multiplicity of players in the space. And what we tell banks is play with everybody. Set yourself up so you're not picking winners. Set yourself up to play with everybody, because you don't know where innovation is going to come from. You have to protect your traditional business. You have to protect your core assets. You have to pick where you want to focus and your strategy. But ultimately, you want to build yourself into a platform, which is where the banking as a platform concept comes from. And I think banks are just trying to figure out what does that look like. And these are large billion-dollar organizations. They're not going to move on a whim. So what you're seeing is this process of alignment. And I believe in the next 2-3 years, the results will be full out on. Ultimately, like I said, right, the bank does a couple things well, and one of those things in particular is compliance. That's why they're able to maintain their license. And then the other thing that they do very well is they have the ability to manage assets appropriately by way of a loan book and so on and so forth. Now the question is, and they have the asset base, the cheap deposits asset base, to be able to deploy capital very easily, or aggregate capital for deployment. It would be a lot more difficult for individual fintech players to be able to amass the kind of deposits and capital base the banks do today. So how does a bank play to that strength with a fintech? Well, a fintech is helping you to reach customer bases that you don't necessarily want to invest in, right? But because they're nimble and they're small and they're building on your infrastructure, they can help you develop that market onto such a time as you feel like you have to go into it. And I think that's how banks should tend to see fintech. Think about them as like, how you have a tugboat and a mothership, or they're your tugboat, right? So you put them out You go out, they prospect customers for you, and I think the next phase really is going to be, banks acquiring fintech companies. Right, when they realize that they are at a scale where, and it fit into their holistic strategy, for which every bank has a different one, then they might decide, okay, we want to make a bid for a fintech. And it's happened before. I mean, Access Bank and I don't know, the Access Bank and Pay with Capture is an example of a partnership that developed from that kind of interaction between a bank and a fintech company. I think ultimately that's a test of the innovators in the market, right? Is it wise for a bank to invest in financial inclusion initiatives? From a social point of view, I believe so. Is a customer acquisition cost initially justifiable? Maybe, maybe not. I'm not sure. I don't have the data to say. But what I do know is that there are individuals who are passionate about that problem. There are sustainable ways to solve that problem. Is that $1 billion bank's responsibility? Can they do it effectively and cheaply, or as cheaply as a two-man startup with a unique view on the market, and that comes from that environment and so deeply understands what the challenges are and what the opportunities are? I don't think so. And so I think that with respect to financial inclusion, the burden is on us as innovators, and the battle starts with shared infrastructure, because there is no other way we will be able to serve that portion of the market if our costs are not if our costs are duplicated across the board by bank. You understand what I'm trying to say? And that's why we're really excited about initiatives like Mcash, because they really provide that shared infrastructure basis on which innovators can then build solutions that will then permeate to the bottom of the pyramid. Yeah, so I like to say Africa is the last stand, right? Because if you think about the future, right, over the next 30 years, more than half of the world's working population is going to be in Africa, right? And over the next, and essentially what you have is a dynamic where this is the youngest continent in the world, 19.5 years old averagely. You have the most mobile phone penetration in Africa. More people are living in the future in Africa than there are anywhere else in the world. And so the world has one opportunity really to engage Africa before it becomes the next China or India. There's no other kind of growth stories left. Right? Latin America has gotten it right to some certain extent. China's gotten it right. India's gotten it right. All that's left now, if you really are thinking about where in the world could I situate myself as a business or locate myself as a business so that I can ultimately build on the next billion users that are coming to technology and to the global economy. There's no other place to do it. And nothing exemplifies this more than Mark Zuckerberg's visit last year. I mean, a lot of people probably thought he came out to see Andela, but realistically what happened is, if you look at Facebook's numbers and projections over the next 5, 6, 7 years, 2.5 billion users. Where are they going to come from? More than half of those users are coming from the Middle East and Africa. Where's the largest country in that region? Nigeria is number 1, right? So you have to understand we're a critical part of the future, despite what many people say, and that's why it's important. I think it really depends on the choices we make today. And as an as a community, as I keep getting reminded, whenever we're at an ecosystem, we're at the community stage. As a community, we can choose to build an ecosystem where we can enable, we can grow the world's best companies that are focused on the future, which is really what we are, if you think about it. Or we can choose to wait for other people to build it for us. And so if, as an ecosystem, we understand that the pie is large enough, and we understand there is a lot more progress to be made by working together than by fighting each other as an ecosystem, we might be able to build something fantastic, and something that would put us on the map from the point of view of that. We have the best opportunity to do it. Every other opportunity in the world is taken, and this is literally the last open gap. So the next 5 to 10 years is really Is the ecosystem going to come together and build the world's last technology leapfrog wonder, or are we going to keep fighting each other until Facebook figures out how to build it, or Google figures out how to build it, and then they come and dominate? That's what the ecosystem has to answer. I think it starts with sharing, and it's a radical idea, but it starts with sharing everything. Sharing ideas, sharing infrastructure, sharing APIs, sharing, anything that is worth sharing. I think you should build your business default open. We always tell the guys at Flutterwave, if we have any technology that within a month of launch isn't open to everybody else to build on top of, I want the product killed, right? Because then it doesn't serve the community. And I think it's also a function of all of us seeing each other as co-collaborators or cooperators. We're going to compete, we're going to build products, but then ultimately having the mission-minded approach to business that is ultimately what is good for the customer. And if that's the top question on every CEO's mind in this ecosystem, I think we will move very quickly from community to ecosystem, because then we would understand that Google Maps being on Apple iPhones serves the community better than both of them deciding to keep their maps separate, right? Even though Apple is a closed company, they still recognize that it's probably better for iPhone users to be able to do it. They could decide to keep it separate, but who would it really serve, right? It doesn't serve them, especially because it doesn't serve the customer. So I hope we get to that point really, where we are like, what's best for the customer? Is it best for the customer for us to collaborate and do it on that basis or not? I think what I would say is build good teams. Build good teams. I think the biggest mistake that a lot of startups are making is there are a lot of people who want to build kind of solo teams. They're not being very customer focused. They're chasing ideas instead of finding a customer they can develop their company with, and they're not building very good teams. And one thing my mentor always used to tell me, very early on, impressed him. He said, look, great companies are built by a group of entrepreneurs who individually could have built something okay or even fantastic, but for them to build truly great companies, they need to come together and work together. And I think that's the biggest thing that young founders need to learn, how to come together and work together, because as an ecosystem, there's no one who knows it all, right? If we want to be an ecosystem, no one knows it all. And what I'd love to see going into the future is an intergenerational mix of people trying to solve the problems with the energy and innovation of the young, with the experience and skill set of the old, and we coming together to actually build things that work in an environment of shared trust. Our partnership with Access Bank is a very simple one to explain, right? They were our first client. That's really what it is. Access Bank is a bank that really prides itself on its ability to make fast decisions with speed, ability to innovate the future, ability to focus on tomorrow, and do it with the best customer service they can muster. And for us, when we came with our concept, we went to a lot of banks, and few banks were willing to take the risk of working with us, because in reality it was a risk, but Access Bank and leadership took a chance on us, and I'd argue they're reaping the benefits today, and that's the extent of the relationship that we have with Access Bank, and it's a relationship we really treasure and value, and that we want to continue to build. But more importantly, I think it's important for all the other banks to see that example and learn from it, and then, we can work, we have the ability to, by the way, to work with other banks to get them to that point. But it was important for us very early on to build with one customer and learn from that customer before branching out into 100 customers or more. But right now, you know, they're not our only customer. We serve more than 10 banks in Nigeria today, and we're helping them to get along the same path. You know, for now, retirement. For now, retirement. We'll see if that answer changes. I need to run.
Yeah, thank you,
okay. Thank you so much. Thank you.